Good morning, everybody. Welcome to Locking Your Successes, Successful Trader of the Month for March of 2016. The Successful Trader of the Month program is something that Sherry and I came up with to reward and honor those traders who have put forth the work and effort, and as a result are doing awesome with their trading. They receive a prestigious Locking Your Successful Options Trader hat, and they also receive an entry for a drawing to receive lots of free stuff. Successful Trader of the Month is also for you, the aspiring trader, because by having those successful traders share their experience with you, you'll gain useful insight and become inspired by knowing it can be done, and there are many, many different paths to do so. A trader can qualify for Successful Trader of the Month in several ways. First would be to provide a trading plan in a recent trade that we evaluate. Second would be to stand out by helping others in the community. This might be through sharing useful information, providing guidance, or providing encouragement. Third might be if I notice someone who breaks through a significant barrier or overcomes a challenge. And fourth would be for creativeness, or someone who successfully adapted their trading to their unique personality, whether it be through one of my styles, or even better, if they come up with something completely on their own. That is great as well. I'm excited today to speak with our Successful Trader of the Month, Louis Guerra. Good morning, Louis.
Good morning, John. Good morning, everybody.
Louis is somebody who's done very well in our Hawaii challenge, and I spoke with him about how he's trading and how he's doing, and things have been going really well. So can you tell us a little bit about yourself, how long you've been trading, and whether you're a full-time, part-time trader, stuff like that?
Yes, sure, of course. Again, everybody, good morning, everybody. Yes, I have been trading for about since 2009. I guess that there was a big rush of people, you know, about my age, who were just getting towards the end of our professional career and wanting to do something more exciting. And I guess that we just hear the chants of the sirens, and they told us everything that we wanted to hear. And here we go, you know. I, like many other people of my age, started to flock towards trading, thinking that it would be easy, and that was in about 2009, you know, and pretty much the path that many of us have followed is what happened to me as well.
Now, you didn't have any experience in trading before 2009, or?
Not only not experience, I mean, I was complete a neophyte and complete in denial. I just remember that my 401k, I never looked at that. I finally decided to start putting some money on it because I said, well, it seems that it's a good idea. But no, I mean, the plans that I chose, it was yes, just like a random leap. I had absolutely no experience, no desire, no nothing. I was just one of those people that said, you know, money will come by itself. You know, if I needed it, it would show. That was my approach to money.
Well, that's cool. So how do you do well so fast? I think a lot of people do expect to come in and just do well instantly, and they find out pretty fast that usually isn't the case. Or if they do, or on the flip side, they think they do make money right away, and then next thing you know, boom, something happens and they've lost it all. So
yeah, I think that I will take away the two qualificatives in there. It was not doing well and it wasn't fast. You know, I think that you know, I started with, I was still working at work, and one of my co-workers started to learn about options, and he said, well, if you want, I can give you these DVDs and you can learn something from that. You know, and that was probably the problem, you know, because I learned to do iron condors when it was the good thing to do iron condors, and as you said, I did well till I didn't, you know, and I don't know what happened. I didn't know what happened, you know. All of a sudden, I just saw my account value just to dissipate, you know, and I said, okay, it seems that you can make money, but you can lose money. So I don't think that I really appreciated how bad of a loss I got there, you know, because I did this small thing, you know, if it works with $5,000, it is going to work with $10,000, and if it works with $10,000, it's going to work with $20,000, and I'm lucky that I stopped right there because it was very painful right away. So and then said, okay, you guys took my money, I need my money back, you know. But no, I didn't do well It didn't do well, and it wasn't fast.
I think that's a fantastic point that you make there too, because so many people when they're trading, they're looking for this trade, and they find a trade that's working right now, and and it gets exciting because they're finally making money, or maybe they're just starting and they're making money, and you think you got it all sewn up, right? Hey, I'm all set now.
Oh, absolutely, and then you start to, if you happen to be a little bit working with Excel spreadsheets, you make projections, and you're going to be millionaire in a couple of, years. You just multiply that, a compounded effect, and voila, you have $2 million in less than a year. And no, it's not that simple.
Right. All of a sudden, that perfect thing that worked well in a certain environment isn't working anymore. Now what do you do, right?
Now what you do? Yes.
So what did you do?
Well, it's one of those things. It said, okay, it seems to me that it is possible to make money in here, but I need to educate myself. And I think that one of the many things that I have been accused of in my previous life, on all my lives, is that I am kind of a professional student. I am always studying something. I was always studying something. Never related with finance, never related with the market. But I always taking this class, taking this course, taking this other, whatever it was in there. So for me to take yet another class was just pretty easy and not a problem, really. It was a problem how expensive it was. I didn't realize how expensive it was to do that, and I don't think that it really hit me until several years late, it says, I think that was a crazy decision. I should not have paid that much money to learn all this stuff. I don't think that it was worth my money, but that was after the fact, after knowing what I knew then,
Right. I think it's important to note that you didn't necessarily go after another trade. Oh, this is going to be the trade, and this is going to be good forever, and that type of attitude. But that you actually decided, hey, I should probably learn how to do certain things.
Right. Yes. But then I did, I did the same mistake that we all do, right? I want to learn everything, and the sooner the better, without really having. I think that compared to today, if I compare what I have seen passing in this year, but especially last year of 2015, with respect to the community, with the open community out there, if you just go start learning in there, I think that there had, back then when I started, there was not such a critical mass of traders who have had the expertise on learning trading and being not only willing to share their experience and their learnings, but also provide the wisdom of how they have become traders, in the sense that you need to learn to have a trading plan, and you need to follow that. You need to learn to accept your losses. A 10% win is okay.
It is okay, yes.
It is okay. It's a great percent winning. Trust me. Well, I want 100%. I want 200%. I say no. Believe me, 5% is okay.
It is okay. Yeah, you're right. And I think you made another good point. In 2009, there was a lot less information and a lot fewer people out there. And I can tell you, when I started in 2006, there was educational companies, but there was nobody who was actually making any money that I could find anyway. They were like when I started, they were also doing Iron Condor strategies. It was in 2006. Iron Condor was like the best thing ever.
Right.
And they're doing Iron Condors until 2007, 2008 came along, and then Iron Condors weren't so good anymore. And that goes, and you get that rotation with every trade. You get certain environments where, hey, it's a broken wing butterfly, and then those don't work anymore. Then you go into a condor, then those don't work anymore. But part of the understanding is coming to the grips that there are trades out there. They only work for a certain amount of time, and then they don't work anymore. And I just don't think that information was available at the time for us.
Correct.
Yeah. and it's and there's a lot more information out there available now. So that's great. So tell us
I
some
think that
more.
there is a little bit of other factor in there, and I don't think that it has been said, or I have not heard that enough. And that's it's what I call that with that really meaning with having that. It's not an offensive expression. What I want to say is I don't mean that from the mean way. It's just critical. It's just matter of fact. But I do think that there was a lack of credibility towards the teachers. The people who were mentoring, they were saying, well, do this, do that. But they did not provide, the goodies. Look, these are the traits that you can be doing, and that's how they work. I have been doing this so many different times, and here I have the traits to prove it. They were always hiding themselves into regulations. They were hiding themselves on other type of things. Well, I cannot provide that. No, I don't have the license. Things like that. But there was no the real aspect of this is working, and here is the proof. And something that they provide to you with the information, with the knowledge, and then you can go out and check it on your own. Say, is this guy selling me some smoke, or it is really working? Can I prove that on my own without any influence of that other person? And I think that factor was lacking out there. It's lacking still, in many places.
It is lacking still in many places, and I don't necessarily think it's up to the educator to provide certain information, but I do think it's up to the student to go in and take whatever strategy they're going to do and thoroughly test it and backtrade it so they understand it and they know what they're doing.
I agree.
Yeah, for sure. But I believe that is missing. So I think everybody's interested. I don't have any questions yet, but if anybody has any questions, feel free to ask them. So what strategy are you using now? Is this something you've come up on your own, or?
Well, it is something that I came on my own, and I thought that I already have found the perfect strategy. I thought that, oh, this is working great, and it was working really nice for me until it didn't, and I did pretty good in 2015 and before. All of that, I have to say that all of that is based on those methods that you have provided to many of us, John. So that was the part that I started. I have learned many other strategies in previous in previous places, in other places, and I am using some of those teachings and learnings. But what I have done with the methods that you provided is what it did work for me, and then I integrated all the other previous experiences. So that is what I was doing, and my journey was a kind of very simplistic. I got the first program, which back then was the Berry Butterfly. I was before you started to recommend to learn the M3 before first. So I did learn the Berry Butterfly first. But I did what I just mentioned to you. I said, okay, John Locke is here providing me with all the information. I have the dates in which he is he's giving me that information where the traits are working, and he's giving me the strikes. Okay, so from the slides that you have in there, I graph the information, what I call the raw data. My previous life, I was a scientist. And I always work with raw data. Don't tell me the conclusions. Don't show me the graphs. Show me the raw data for your experiments. So I graph the raw data from your slides on the course, and then I didn't have option view, so I went to TOS on demand, and then I said, okay, on this particular date, I'm going to use this, and I'm going to think that this is the information is correct. I can live with a fudge factor in there, plus minus a little bit, but basically it's the same. So what I did is I just put everything on TOS on demand, every single trait that you have every single one that you have in the Berry Butterfly. And I got my spreadsheet and put my calculations, and I said, it's true. It is absolutely true. This stuff, I came with a difference of sometimes $200 minus or plus. On that, it was never something major. And said, this stuff it passed what one friend of mine says, the sniff test. I can
Right.
trust information. And that was very important for me.
That's fantastic. Yeah, that's excellent. Yeah, and I think that gains a little bit of faith in your process.
Right. So for me that was very important, because then I told to myself, I can trust every piece of information that is coming from John Locke. I don't have to second guess it. I already tested. I can make a spot check here and there from time to time, but I am going to trust that completely. But I did that my checking first on my own, and it took me several weeks, because it was not an easy, quick process, And that was, after going and learning what is in the video and the course on that. But then I said, okay, I didn't have a set option view, so I didn't know the virtues of the program. I was too cheap to pay yet and for yet something else. I said, no, I'm going to see if I can do this thing here. But then my journey was, I want to learn everything. I really want to learn the Berry's butterfly, the M3, and the rock. Before I place any particular trade. And I did certain a journey with my trading buddy, Rick Mahardy, and we did study. And what I mean study, I meant study. I mean we went there at it for about anything between 4 and 8 hours a day for months. I remember that we started sometime in May of 2013, and with somewhere around October, we said, I think that we're done with this thing here. I think that we're ready to place a trade,
Nice.
But we did study hard, and every single slide that you provide in the course, I mean, we put it inside out, left and right, and what is this, what is number, this is all, he has a typo, he meant this, it's this stuff, we just look into that. And we could not reproduce because neither of us had option view, but said, no, this is here, this is good stuff, and said, fine. So we learned everything, and then, let's go and start trading. I mean, this is what we want to do, and then place the trade. I mean, both right on the deep end, going there on the deep end, and I started trading the rock. I am not a patient person. Berry's butterfly or an M3 with 56 days to expiration, it is way too long for my personality. I said, no, I think that the rock suits more my style of trading. I like the 28 days to expiration, and I think that I can work on that. So I did a lot of the rock, on that, and I start to be trading that.
Yeah, it's important to understand your own personality and what you can do and what you can't do. A lot of people, they're just looking for the money. They're looking for the most money, but they're in that process of just being a money auger and looking for the cash. They're just completely putting themselves in trading systems that they just can't deal with. And
right.
That's quite problematic. Yeah. All right. That's super. So are you primarily still in the rock strategy type of thing, or is it something that you've modified and made your own?
I started doing the rock, and I did pretty good with the rock, and I started to modify that. But then what happened to me was at the beginning of this year, and what happened at the beginning of this year, we have never seen that before. Everything that has happened, since late December to these days, in which the market drops so violently, and then it just shoots up so violently there. And my problem that I have with the rock was that I have so little time, and I thought that I could control that, and I did not. I didn't have the time, nor I could control that, and then I was. I really think that I got overconfident. I got too cocky. I got too, self-righteous. I got all the wrong things at the wrong time.
That's easy to happen when you've had a winning streak.
Yes, it is. and then just like Ken Fisher says, the great humiliator came and made me humble. Made me humble.
Right, right. And how did you modify things, or are you still in the process of working with that?
I am still in the process of improving my system, and
Okay.
basically, since we don't know how the market is, the beauty of learning the strategies, all the different methods, and trying to really go into the inner goals of that, is that if you do that with every single other method or system that you find out there, it doesn't have to be only the John Locke one, any other one in there, and you really dig deep into that and understand them, then what you are going to be doing, what many of us are doing, is that we start to have a portfolio of strategies, when the market
Mhm.
is doing this thing here, this is what it works best for me, you know. So so
Ah,
I
right. Nice.
I started to remember, okay, what is this market doing, and why did I lose here, and in addition to my personal shortcomings, in addition to my personality, my style of trading, my denial, my recklessness, what else? Okay, yeah, put that aside, get over that, please. Why did you lose, Well, okay, so you lost because you didn't have enough time and volatility was too high, you know. Okay, so
Hmm.
how do I compensate for that? When volatility is too high, what are you going to do? And when volatility is too low, what are you going to do? And how do you look into that? So I start to put a different type of control process control steps in there, in which check this first, check all the gauges in your system before you start going on and decide what the strategy is.
Right, right. So in other words, a way of deciding what the market is doing, and then by realizing what the market's doing, you can go out and make the adaptations to your strategy, which you know how to do because you've traded the different strategies.
Exactly. That is absolutely correct. And then again, I have to emphasize still the basis of all what I do is your strategies. It is the butterflies. It is the in the money calls. It is the combination of all the different things. But I try to develop that more towards my style, and I thought that I have a neat thing that is what I wanted to share with everybody. But then I said, I told to myself, Luis, you cannot share this thing here because, not because you lost and you lost big, that is okay. It is because you were winning, you lost big, but you still don't know how to fix that. So I don't think that it will be honest from my side to provide some type of a strategy to the community, in which, given the ground conditions, everybody or people are going to start to lose, and I will not have answers to that. I will think that would be dishonest on my side, and I said, first I need to fix this one before I start to share that with anybody. And that's when I said, okay, now I'm in a big trouble, because I could share what it works, but then it will be not genuine. It will not be complete. You know.
Right, and I think that's something that I think all of us at some point as traders come to the realization that certain things don't work in certain environments, and
Mhm.
there's nothing that works in every environment, and especially if you're a shorter term trader and you're getting closer to expiration, there's so many variables in there that can make something work. I mean, you see it with weekly strategies. They come in and they'll work for 6 months, and then they're a disaster for 6 months. So
Yes.
um, you definitely see that type of stuff. And so that's a really, really good point there. And just because you're having 2 or 3 or whatever bad months doesn't mean you're not a good trader. It doesn't mean that your system's no good necessarily. It just means you had 2 or 3 bad months. If you keep your
Yes.
mindset straight and make your modifications, then you can just go ahead and move forward, right?
And it's just like everything else, it is learn the reasons why you lost. There is the psychological aspect on that we need to overcome, and then there is the educational part. Know your shortcomings. What is exactly the part that you don't understand. And why is that? And can you understand it now? And if you don't understand it now, don't place another test until you really can explain that to yourself. And sometimes we are, as because it is very easy to say, well, I didn't follow the guidelines. I said, okay, fine. We don't follow the guidelines. I should have exit here. I should have, yes, but why you didn't do that? I mean, it is because you didn't want to pay the price, or it is because you didn't know how to evaluate your profile, your T+0 line, and evaluate that big sharp fall towards the left of your T+0 line is going to kill you. And what are the Greek drivers that make that curve going that bad that way? Can you explain that to yourself?
Right, and you should be able to do that, exactly, rather than just not knowing. I think that's great. Did you have anything you wanted to show us on your screen, Louis?
Yes, I do. I have a couple of things. I wanted, as I said, I wanted to share a method, and I'm going to have to take a rain check. But what I want to do to share with the community today, it is something how I started to look at the John Locke strategies, and in particular, I want to talk about my approach to the system. Let me see.
You just share your screen.
Yeah, can you see the slide?
Ah, yes.
All right. So what I really wanted to share is how I start to approach that, and what was, in addition to learning everything out there, how is that I went to that particular journey. So I have a lot of material prepared, and when I was doing my dress rehearsal yesterday, it just became way too convoluted. So I'm going to skip over 70% of the presentation. I am going to put only important stuff that I think it is important to share. It is not the full-fledged out presentation. You and I talked before, John, and you graciously accepted for me to go longer. But I just think that it will be too long, so I am just going to cut it short. But I want to try to convey the meat and potatoes of what I was doing in there. Okay.
It's fantastic.
So again, these are disclaimers. We already know about that, and there is no traders presentation without disclaimers.
That's right. They're required, right?
Right.
I think it's because so many people blindly jump into the market and lose money. So,
yeah. Okay. So what I really am going to do is I'm going to talk about the money aspect of the strategies of John Locke. But what I mean for that is just how it is the financial aspect. I'm going to do a simple math of the simple example, okay? I'm going to break it down to the easiest component, which is the bearish butterfly, only one third in there, And of course, I have done this type of analysis extensively with the three systems of the butterflies, two, three thirds, the entry concepts, the rock, and all that stuff. And all of that, it's really just variations of the same thing. But I just wanted to show the easiest part of that, and that is show me the money, all right? And I'm going to give you the conclusion of what it is. So you are going to see the end of the movie. You are going to see the good guy riding towards the sunset with the girl, And basically, it is, I came out with, I call the dream butterfly, And the dream butterfly is just that. It is a dream. It is nothing. It is something that is not happening. That is not possible. It is not a method of system to trade butterflies. So don't ask me for guidelines because I don't have them. Certainly, it's not a substitute or improvement to any of John Locke's methods. There is none of that. It is an overview and dissection of the butterfly. Why they can make money? How can they can make money? That is what I mean with the dream butterfly. And here I have an example of an entry butterfly. This is right now. Okay, this is June expiration. I got these prices. For this particular one was on Friday. These are the prices on Friday for the entry, 56 days to expiration. So if the market was quoting at around 1150 or give or take, and so I placed my butterfly with central strikes at 1120, and I paid $10.50. So this is just your normal entry. And just to put a perspective of what I want to talk about, if we had only one third, butterfly, and we don't do any adjustments, and nothing happens, and we just hit the jackpot, and we reach a profit target on this particular one, which is 30%, that means that we are going to close somewhere around where this yellow line is. Okay, that is give or take $15,000. Okay, that means that we are going to be here, the underline and our T plus 0 line are going to be, the underline is going to be somewhere in this area, over here for us to make at least $15,000 when we decide to exit, right? I don't think that anybody has ever hit the jackpot, from entering 50 days extra expiration, not touching it, and hitting that. I think that everybody needs to give a buck to that, the first person to do that. But I think that it's highly improbable that we do that. But basically, go ahead.
Oh, I was going to say, the only way that happens is if you put this on and forget about it and come back and you happen to hit it right.
Right, that you go in a coma, right, and you wake up 56 days later.
Right.
And everything goes your way. Yes, absolutely. But that's just to put it in perspective. This is the price that it was quoting at that particular time. This is what we need to make the money, and this is our butterfly just at entry. So the dream butterfly. What do I mean for that? How would you like to know that 30 days after you place your butterfly, you have made adjustments, and now your butterfly looks like this? This is a dream. Why that? Because now, I am still on the trade, and now I have my left horizontal, the maximum that I cannot lose, because everything is above zero. Okay, I cannot lose. I have here the minimum that I can make is about $6,000, whether it goes all the way down or whether it goes all the way up. I can make about $6,000. And if you happen to come and pull back and stay in this region, then I can make my whole money. I said, well, that's a dream. I don't think that I can make it. But just like when you are dreaming, just because it is an unreachable star, just because it's something that you cannot get there, that you know that you're not going to get there in your lifetime, maybe in the lifetimes of many generations. Let's say, for instance, that we want to find life in another planet, and that is way, 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 way many years away from us, generations maybe. But we have to start the journey now. So what will it take for me to put my butterflies in what I call dream mode? I have dream mode. And just anecdotically, and I don't have the hard data here, but I have reached dream mode in several occasions for one side, not for both sides. What it means? That now I have my trade, I have managed it in a way that now it looks something like this, but I cannot lose to the downside, or I cannot lose to the upside. And I'm still on the race to make that. But that is just seldom. And that is when I'm doing my adjustments. But I always keep in mind my dream. I would like to have a butterfly that after I do my adjustments, it will look like this. And I will then I will not have any problem to going with this, not only to expiration day, but to settlement the day after, because as we know, the rod has with expiration day for me it's just on Thursday. But even then, at the close of Thursday, that expiration date doesn't tell me anything. I have to wait to the next morning for the settlement. So I can go to expiration day, and then I can go to settlement day with something like this and be perfectly happy about that. And that's what is a dream butterfly, because you can dream of getting it, but it's very difficult to do that. That doesn't mean that there are things. So having that in mind, I started to study. It was one of those things what I call the after 5 o'clock projects. Which is things that I work after 5 o'clock. That was some expression that we have in my previous profession. So what is the dream butterfly? It's a conceptual tool. It's just a concept. It's a tool to identify opportunities, to lock profits, to reduce risks, to utilize the position inventory, whatever we have in our inventory, to open new or to close existing contracts. I'm going to be moving everything about that. But also, I need to calculate the margin requirements. And that is very important for me, I need to calculate the market requirements, in particular for Reg T, which is what most of us have, but specifically for retirement accounts, because I want to make a more efficient use of the planned capital. And I have to reiterate this of the retirement accounts. For me, it's very important that, because I do my trades, basically two sets of trades. I do one trade in my Reg T account and the other exactly on my retirement account, and the regulations that I do have for the retirement account is just, it's you have to provide 100% of that capital. There is no excess or additional risk that you don't have in your account. If you don't have the money in your account, we don't let you do the trade, and that is very important. That is a constraint. So maybe there are easy ways to do that in portfolio margin, but I am not really interested, because I want to do something on my retirement account, and that is personally very important for me. Okay, so I need to learn how to use more efficient all of that. But then, having said that, it's not that I'm just going to go and freelance. Okay, all of these things here, bullet points that you see here, all of them are after. Okay, I am following the guidelines of John Locke method. Okay, that doesn't mean that I threw through the window the delta ranges. I don't throw through the window that now I have positive vega, or that my T plus 0 line, it is just completely whack. Or that I don't exit that now with less profit. No, I continue to do that, but then I put this particular twist and see whether or not I can do the trade mine, and make it work more efficiently. Okay, all right. So far, so good.
So far, so good. Just a quick question, and we'll just throw this in because it came in a while ago. It's just how important is community for you?
How important? This has been extremely important for me. Yeah. I think that any one of us trying to trade in the vacuum as a solo trader will have died long. I mean, it will have died pretty quick.
Yeah, I think you said you have a trading buddy that you trust. I think communities they're twofold. They can help you and they can hurt you. If you're in a community with specific people who are supportive of you and they're actually doing the right things, I think it's very supportive. But then you also have communities that maybe aren't doing the right things, or they're trying to get you to, jumping you back and forth from trade to trade and not letting you be consistent with your trading. And I think in that way maybe it's hurtful.
Absolutely. And since we're talking about trading bodies, I just want to emphasize what it was very important for me. I have been collaborating and have a lot of trading bodies with many people, and many of them are probably present here today, and many others. And I always try to do things with a one-on-one or one-on-many or with groups and things like that. That has been very important for that. But I did have a qualitative jump in terms of collaborations when Ray and I openly share our those accounts. He said, you can see my account. I don't mind. I want just to make sure that what Ray do, is okay, that you understand that, and make sure that we're doing the right things for the right reasons. And that it was a qualitative jump. So it's the old trick, right? Yeah, I show you mine if you show me yours. So then we changed that, and that gave us a lot of flexibility, because then we can freely speak about all the implications of the things that we're doing. There is no second agenda when we share something in there. It is well, I don't have the capital. Oh my gosh, okay, well, how can we solve that problem?
Right.
That brings the whole collaboration to a different level. And of course, you don't do that with everybody. And each one of us has to be very selective and choosy on how we do that. But there is a level of trust that you need to reach in order to bring your collaboration to a different level.
Right, because unfortunately there are people out there who are saying they're doing wonderful in these trades and they're really not.
Exactly. You never know if all what they do is just paper money, for instance.
Right.
And then once you see this is important, because now once you see, I see that trade, and I said, you know what, you are going to lose on that, and you are going to lose more than your acceptable max loss. Either you get the hell out of that trade, or you change it, or do something, and that goes back and forth because we know that that trade is real. We know that it's going to hurt, and that is a tremendous helpful one for each one of us.
Right. And it keeps you responsible too. If you're not following what you said you were going to do, somebody says, "Hey, what are you doing?"
And it gives you responsible for your own trades, and somehow brings some level of accountability from you to the other person. In this sense, well, will I leave some? If I go to the beach, with my friend, will I let him drown? No. I would say, get out of there, please. You're drowning, or let me give you a hand. That's the same thing here. It is not any different.
Right.
But that is because I know that it is real money. He knows that it's real money. So it may not be for everybody, and for those of you who can do it, it just brings a different a quality of collaboration. And that was also very important for us. It certainly is for me.
Fantastic.
All right.
All right, moving on.
So if I want to do my dream butterfly, what I need to do? Well, very simple, right? I need to learn the anatomy of the butterfly. Okay, so these are the animals that we're talking about. Let's see what we're talking about.
That looks like a missing wing butterfly. So that must be a vertical spread.
No, see, it's over here. See.
Okay.
A missing wing butterfly. So actually, it is a butterfly on the right and a moth on the left. And just for everybody who is interested in the main, there are two main differences. Moths fly in the dark or in the light in the absence of daily light, and butterflies fly in there, and there are of course exceptions. And the other one main difference is the antenna. The antenna for the moths have these three things, whereas the antenna for the butterfly is this particular way. All right, and that I just learned it because I wanted you to say. But speaking of butterflies, you know that you're going to have margin involved on all of them. So be aware of that. Okay, so in order to talk about the dream butterfly, I had prepared a lot of material that I thought it was important. And as I said before, it is just I'm just not going to do that. There is just no way. Everybody's going to dive to death here with me and said, what the hell is this guy talking about? So these are all the different topics that I have. I wanted to talk about that, but I am not going to. I am just going to talk about these ones that are highlighted in this purple font, profit target, and a little bit of the Paris put butterfly in there. But all of these topics, I was prepared to talk about that. And then I wanted to talk about the embedded baby verticals, right leaners, left leaners, the dream butterfly, harvesting baby verticals, reverse harvest, and margin impact. Okay, so that's all what I wanted to do, but we're not going to do that. I'm just going to touch in some of these topics, so for you to see how I am wired in a certain way, and how this wiring allow me to look into the various butterflies. Okay, so this is my cue for me to go to the Excel spreadsheet. All right.
Okay.
Here is the Excel spreadsheet. We make it big, and this is just okay. The guidelines tell me what the guidelines tell me. Let's put that on the numbers. So just a quick review of what we have. We have our planned capital of $50,000, and I'm just going to limit this to 10 lot. We know that it can be different, but let's take the starting situation, 10 lot. We have a 30% target profit for our berry butterfly. That means that we want to make $15,000. That is very important. That was our money. We want to do that. But then we're willing to lose the 30%, which means that we're willing to lose $15,000 as well. And this is just a multiplier that I need to calculate all these numbers in here. Okay. So initially, when we enter the butterfly, we're going to have different prices. But basically, if we look into 56 days and volatility is high, ideally we're going to be looking at $8.50. That means that one lot is going to cost us $850, and the total cash flow going out of our account for a 10 lot is going to be $8,500. Simple math. Okay, not complicated. It's just simple math. All right. And I just put in here the catastrophic mass loss. What is that? If I am just completely forgot that I do trade and I open the trade and never do that and hit mass loss, my catastrophic mass loss in this particular case is going to be the $8,500, which for this specific example, just this example, less than the max loss that I am willing to accept. So nothing bad in there. But then I said, okay, well, you know, I really want to hit my target profit of $15,000, you know, and I know that I need to put this capital in the $8,500. So how much money do I get at the end of the day? You know, what is going to be my pot? You know, well, I need to get $23,500 back. You know, and that's interesting. So that means that based not on my planned capital, but based on the capital that I did invest, which is this one here, I need to get a return on 176%. Let me repeat that. I will need to get a return on 176%. For those of us who have placed a couple of trades from time to time, we know that reaching a return on 176% is hard.
It's difficult, yes.
It's hard, it's difficult. It is not so easy. So let's put that in perspective. So this is what it means. That's why we don't get many of this. We may get those from time to time. So that means basically that the price of my butterfly at the exit is going to be $23.50, you know, and if I paid $15, that means that the price has increased this much. So I'm just put that in perspective. So we need to go from $8.50 to $23.50 just in this simple example, okay? And that is something that I think that if we are not aware of that, you know, we start not realizing how easy or how difficult it is. So if you ever, you know, enter a butterfly and you pay whatever amount you pay, you know, and you put and what I call a stupid order to close it, you know, and you put 23, put it for $23, you know, so that you can get your max loss. And if you get filled, you know, but it's going to be very difficult to get to this particular price. And of course, you know, this is just on this particular example. The price of the butterfly, as we know, it can be very different. So if we have $10 instead of the $8.50, then everything changed, right? Everything changed. And as we can see here, my catastrophic loss is going to be $10,000. But now what I need to gain on my invest capital or what is the price of my butterfly start to be different. So this is going to be a moving target. You know, if I let's say pay $12 for that, which is possible, you know, that is how the dynamics of that is, and that is important for all of us, right? That is important for us to see how it works. And this is
right. That's why entry prices are so important when you go in.
Yes, exactly. Yeah. It's 12. Sorry, minus 12. Okay. And I just as a quick reference, you know, this number here that you see in this cell that seems to be like isolated, is just to tell me, you know, based on that rule of thumb that based on the entry price, how many points can tolerate the rod to move, and you can see that, okay? So if I pay $12, that means, you know, doesn't mean exactly that it's exact science, but as a reference, 80 points up move of the rod, it can be sustained. If it is only $8.50, what I pay for that, this number goes clearly to 115, right? And it is just all those things are changing, all right? So this is the simplest example. This is very simple, all right? But we need to understand. I need to understand that anyway. And when I said we, I mean me, only me. So we now come to the 2/3 entry, right? Now we go the same conditions as over here, but now, as we know from experience, you know, if we need to add the 2/3, typically the price of the second butterfly is going to be more expensive than the first one. So I just put here these prices in there, you know. And now what I want to emphasize on this particular example is that now our catastrophic loss can be $22,000 based on these entry prices, which again, they can vary, here and there. But it's about realistic, So now you can see why it's important to have the rules and the guidelines for max loss. Because now, if you're not willing to accept the max loss, you can have a tendency to go to a catastrophic max loss, which is going to be of $22,000. Believe me, $22,000 is worse than $15,000. So you don't want to go there. So, but it's important that you now see how you can get into that. It's just because we pay this money and we can lose all of it. We can lose the $22,000. So, but the perspective with respect to the percent gain on our invested capital has changed now, right? Because we still want the $15,000, but now we're putting more capital. We need to get $37,000 at the exit door, but that means that we are going to settle only for 68% profit. Well, it's still pretty high, but it's certainly not as big as 176% in this case. So it's more palatable. It seems that a little bit more on okay, doesn't look that bad. And then of course the exit price, target price is a moving target, because the price of the butterflies is going to be different, and the contribution to the profits is going to be different. I don't know exactly, I didn't do any statistical study how the partition will be. The simple will be 50% and 50%, in which case, which is not going to be the case, trust me, it's not going to be that. It's going to be skewed to one or the other.
Right.
But we are going to have that. Let's say just more like a realistic case, this one contributes 40%, the other 60%. If that is the case, you need to gain on this particular one $6,000, and this one is making you $9,000. That seems a little bit more possible, right? And then you can see that now I need to make 60% on this butterfly and 75% on this other one. So I mean, it starts to change a little bit from the picture of the other one, but we're putting more risk, and then we have to stay more time, and yada yada yada. So that is the whole thing. So looking into that just gives me a perspective of what to expect to happen with when I enter that, and looking at the money on that. And then of course we have the third, and this is again the simplistic case in which I am looking only at the entry prices. I am not looking into, I did roll the first third, I rolled over, I have a last point, and I was sorting all that stuff, and I just looking into that, 3 butterflies. But in this particular case, I got some real life data, and this is from John Locke's information of that butterfly for the month of April. The last 3 ones, okay? Not the early ones, but the last 3 ones, okay? So these prices are the 3 butterflies that he had, on the trade, how much he paid there when he entered those ones after following the guidelines and things like that. So this represent, as you can see, because he had to stay to that trade longer time, and he had to make the rolls and the additions and closing one on the left side and adding on the right side, he started to pay more and more money. And as he was paying more and more money for those butterflies, that gives you an idea that now the 850 price for the first butterfly, it just doubled up on you. It is way too expensive. That just tells you, that you better put your seatbelt, because you are going to be along for the ride, with the market. The market may not be nice to you. Once you start to pay this price and you just have to stay closer to expiration, it is going to be more difficult to do your money. In addition to that, your catastrophic mass loss is going to increase. Now, the catastrophic mass loss is $45,000, and again, this doesn't take into consideration all the realized losses that you may have on the trade because you have canceled all the butterflies. This is just the most simplistic way. But you can see here how the $15,000 that you were willing to lose, can creep up all the way to $45,000. So it's very important that you not only follow the guidelines, but also that you're aware of how bad is bad. We always go with the rosy stuff. I can make $15,000, but if we are naive enough, if we are unprepared enough, if I am just reckless, I can lose $45,000. And I can say that it has happened to some of us. sometimes. All right. So, but then in this particular case, the monies that I need to make with respect to the capital that I invest in starts to look a little bit more palatable. It starts to look a little bit more reachable. You know, now for my $45,000, I only need to make 33%, which is pretty close to my $50,000. So that goes more in tune with that. So that is where this particular number comes. And you can see here, you know, it is possible. It is possible that. And how I'm going to read.
I got two quick questions for you,
Yes.
and if you don't mind, just did your calculation, and it's just relevant to this point, did your calculation of being 3/3 in include previously gained losses?
No, does not. This is a simplistic way. It doesn't.
Oh, simplistic. Okay. Yeah. So it's just very simplistic. Okay. Super. And the other one is just will you overtrade doing the dream butterfly because there's so many objectives going on?
Yeah, you know, you are going to not overtrade. You are going to do a lot of adjustments. Your commissions is going to be creeping up on you. But
okay.
Yes,
cool.
You can do that. You can do that, and that has to be part of the equation of what you do in there. You know, on that. But yes,
okay.
absolutely.
All right. Super. Okay. That's all we had. For questions.
So now if you look at this particular partition, we're not going to get that. And I will say, you know, that if you are going to hit your profit target and you are in 3/3, you have to be closer to the center of the butterfly. You know, so the middle one is probably going to be giving you the lion's share, and the left one not so much because, you know, give or take, you know, it doesn't matter. It's going to be a different partition. I happen to choose this particular one, so you can accommodate that on that. Certainly, it's not going to be equally distributed either. You know, that is just a fact of the pricing of the butterflies with respect to the underlying. But now you can see here the amount that I need to win. You know, with this particular one here, I only from the 1/3, I only need to make $1,500, $9,000 with the other one, and $4,500 with the other one. So the target seems a little bit more in tune with reality, and that it's easily explained over here as well. You know, you can see that my 1/3, I only need to make 11%. The big part comes from the middle one, which is 58%, which is still, you know, it is possible. It is not crazy, I have to say, and 27% on that. So when you are in 3/3, now you can see how the requirements of the system for us to reach our target price start to work a little bit more into things that we can achieve in reality. Okay?
Mm-hmm.
So that is a very simplistic way, and that is, as I said, you know, this probably is known for many of you guys. So I do have to apologize if this looks too simplistic, but this is how I started to do my stuff. Okay?
Okay.
All right. So we're here, and then so what is next? So where do we go from here? That's fine and dandy. So we need to learn a little bit more of anatomy of that, and now we need to look a little bit more into the close-up view of the butterfly. You know, we need to know a little bit more of that particular butterfly for us to see how the monesis generates, how the monesis is loose. You know, and basically what I did in a more simplistic way. Okay, in a more simplistic way, we start talking about the synthetics, you know, and start talking about a put butterfly, you know, that we have over here with an entry price of a debit of 1050, okay? And very easily, you know, just hashing what we all know, we have a long, a short, two shorts on the same strike, and another long 50 points away. You know, this your 50-point wide put bearish butterfly, you know. But this one here, part of the synthetics, one version of that synthetics is that we can look that as a two verticals. One debit put vertical, we paid money for that, and one credit put vertical. We receive money from this particular one. And if you add these two guys here, 2080 and 1030, you are going to come out with the debit of 1050. Okay, so you pay more for the debit, but you get a credit for this particular one, and at the end you feel it looks exactly the same. There is absolutely no difference. But I want to break it down on the verticals. And then the composition of the verticals are these ones here. You are long at 1170, a short at 1120, and for the credit one, you are short first at 1120, and then you are long at 1070. Nothing magical about that, okay? It is just all what we all know how the butterflies are done, you know. But these are directional put-based butterflies. Let me emphasize that, you know. Yes, we can kind of talk about market neutral strategies, but in reality, a bearish butterfly is a directional butterfly. We need the market to move back eventually at one point for us to make some money, you know, or most of our money. It's a directional one, and that's why, you know, we see that our deltas are negative deltas when we enter that. Whether they're 100 deltas negative or 200 negatives, it is another level of sophistication, but they have to be negative deltas. And so it's because of that, and just because of that, is a directional one, okay? But in the case of our debit vertical, the maximum reward that we want to get is $50, which is the width of the spread, you know, minus the debit that we paid, okay? So very simple. 29.50, 29.20 over here. That's how much money we can make. And for the credit side, 10.30. Nothing really different. We know all that. We all of us know that. Okay. But I need to touch into that because now again that's my cue to go to Excel. So let's go to Excel. And what I want to share with you is how the money is made on that, and how is the contribution of each of these particular sites. And I am taking this data from current market conditions. These are for this particular June expiration butterfly. But basically, the credit on the credit side, you know, the credit that we get for that vertical is 10.30. So my maximum reward is that. That means that in order to get all the monies from this particular credit, I need to expire it worthless, meaning not paying anything to exit that position. I will get all of the money. You know, I will be risking $39 on this $50 spread, you know, so my reward to risk is 26%, and I am using, you know, the 1030 by the 39.70, not by the 50, by the 39.70, you know, and I get a reward of 26%. Okay, I'm doing the same calculation for the debit side. If I pay 20.80, the maximum exit price, that means that they need to expire in the money, both the strikes. I will get $50 on that. So my maximum reward is 29.20, you know, for this particular spread. My risk reward is 140, and I will 140% on that. Okay, so as you can see here, and it is intuitive, you know, but here are the numbers to prove that we make the most of our money in the put-based butterfly from the debit side. You know, the potential to make it, you can see that we are pretty much locked, for lack of a better word. We already maxed out on the credit side. The maximum that we can make on the credit is the credit that we get when we enter that. That's it. You cannot get better than that. That's it. So that's why in conditions of high volatility, when you get more credits for when you're selling the verticals, the price of the butterfly drops because the credits that you get on the credit side of the vertical, it is bigger. Okay, this credit can increase more than what it is, and then your butterfly price drops. But now you think about it, you know, it's going to drop, it's going to increase its value, but it is not going to be a whole lot. You know, I can get, let's say, for instance, if I paid for this one $10.50 for this butterfly, let me see, how much did I say that I paid? $10.50, yeah. You know, I get this particular credit. You know, getting instead of $10.50, dropping this one to $8.50, which is you know, a good entry price. You know, you can see. There's something wrong with my math.
You'd have to increase that.
I have to increase it
because the negative.
Right. Fair enough. So let me just go that to, instead of 1050 to 1250, right? And negative. I get more credit on that. Yes. So you can see that it is 33%. So you see that even on the best case scenario, you know, it is not going to be a whole lot more on that. You know, it is the credit that you receive. You know, even if you get $15, which will be butterflies in the neighborhood of 650 or something like that, you're only going to make 43%. So that gives you into perspective, number one, how difficult it is to get a cheaper price on the butterflies, and how this is just limited in the terms of how much money we're going to make on that. So the lion's share of our put butterflies, is coming from the debit side, and that is by itself, something that said, oh, okay, nothing wrong with that, it's just what it is, Let me digest this information. Let me see how I'm using that. But that is the fact on that. All right. And then go ahead.
Oh, I don't have anything to say, Dave. I'm all set, Louis.
All right. I thought that there were some questions. So far, so good in here?
So far, so good. Yeah, we're following along here. And
okay. So let me just then come back to the so that's what I insist that they are directional, okay? And we may have some kind of and we can talk about that, but basically we need the underline to pull back for us to make money. I mean, that's, or at least stay on that area. Okay, and then after this, everything just breaks loose on the presentation. I really don't want to go to the bitter details. I have prepared information for all the synthetics and how the monies are coming and going, and I have examples on those. I'm not going to go there. I wanted to talk about embedded baby verticals and all those type of things. But let me just say that the principle for me to look into the dream butterfly is now that I have looked into my credit vertical and my debit vertical, I can break it down a little bit more. Okay, so and now what I did further, it is I broke down those 50 points wide verticals that I have, the debit side. I broke it down. I represented them with 5 embedded baby verticals, 10 points wide each, and I need to emphasize this is a tool. I don't mean that I'm going to enter 5 different verticals. My entry is still the normal order ticket put butterfly, but I am going to analyze this one here on the debit side as 5 babies. And these are the strikes that I am analyzing that. So this is a tool for me to analyze this particular trade. 5 debit
so you're analyzing every 10 points as verticals.
I am analyzing every 10 points as verticals, and I call them babies.
Okay.
And 5 babies are debits, and here are the strikes, and start again 1170, and then add until 1120, 5 of them, and they are embedded. I don't need to enter the trade; they just happen to be there. They are there, even if you don't know it. They are there.
Right.
It's just like the IRS. It's going to take your money, even if you don't want to admit that. It's there. And on the credit side is the same thing. I can represent that with 5 embedded baby credit verticals 10 points wide. And the baby 6 just follows the numeration from the previous one, where the other one left at 1120, and it goes down all the way to 1070. Okay, 5 of them. And why do I do that? I mean, does it really make sense? So there are all of them. The debit verticals on the right side and the credit verticals on the left side. And the only reason why I do that is because when you look at the figure of the profile, they look like this. So the baby 1 to 5 are on the right side, and the baby 6 to 10 are on the left side. All right. So these guys are what we call the right leaners, and these are what we call the left leaners. All right. In this particular. And that's what we have in there. So basically, each baby vertical is 10 point wide. For a debit baby vertical, the maximum reward is equal to $10 minus the debit paid. And for a credit baby vertical, the maximum reward is equal to whatever credit we receive. That's it. If we let it expire worthless, that's it. It is going to expire worthless, and we make all our money. And then the risk reward is different. the baby verticals closer to the longs have the lowest reward. The baby verticals closer to the short strikes have the highest reward. And we kind of know that, right? I mean, most of the money in our butterfly is over here, right? But, you know, we are, gosh, why to kill ourselves if we have Excel, right? So this is again the analysis of the verticals. Let me put it this way because that is what I was showing. You know, I screw up here. Well, it doesn't matter really. How I numbered here.
It's giving you a hard time there.
Yes, I know. I just show that on the right side and left side, and now I flip on you on the numbers in here. But anyhow, so this is just to let you know that on the credit side for this particular butterfly that we are analyzing, it is the same butterfly. Nothing has changed. If I have entered, I need to be crazy too, but if I have entered that with 10 verticals, this is what the cost of each vertical was. You know, I will be getting a credit of 165 for baby 10, which is from the 1070 to the 1080, to $2 for this other one, to 375, and you can see that at the very top I will be getting a credit of 310. You know, coming from the debit side, you know, I will have to pay $6, $5.25, $4.70, $4.10. I will be paying less for this baby over here, baby 5, close to the peak, to the shorts, you know, on that. And this all together so that we are in sync. When I put all of this together, you know, this one is I took it on a different day, so you can barely see here the sum is 1195. Okay, so if I put this one here, the sum, for instance, of these guys here, you know, that will be the price of 1195. So because I did a different day, so I need to correct myself. But basically, doing a quick analysis on that, what I want to show you is that towards the longs, you know, we can make a reward of 20%, a maximum reward for the baby 10, and a maximum reward of 45% for the baby 6. And in the case of the debit ones, we can make a maximum return of 65% and 174% on that. So you know, it's less maximum reward on the edges of the butterfly, and we kind of know that. And then, but it's easier to get it, right? We are going to get it, you know, when the market moves, when time goes by, a combination of both, and we can get both of them, okay? But this is how where the money is coming from. And then we start to look a little bit on that. So this is, I guess this was the correct, what I wanted to show as well. It's the same information as above, okay? So this is just the same representation. What I wanted to show you here on this one here is that if you just target, okay, an 80% of the maximum reward, you know, so you know that this is your maximum reward, but you only get your maximum reward, okay? That means that now you can close this baby one for 33 cents. You can close this one for 40 cents. You can close this one for 46 cents. You can close this one for 55 cents. If you start to close these particular verticals here, you start to collect 80% of each particular one. You cannot do them all at the same time because at the same day, because the prices are going to be different. It needs, the underlying needs to move on. The underlying needs to be moving in your way, you know. But this is just to put that into perspective, you know. So if I paid to exit this particular baby butterfly 33 cents, then I will be making 80% of this profit, you know. And just to put that into perspective, you know, if I do have only one butterfly, you know, I may not be reaching my 176% profit that I want to do on the butterfly, you know, but I am certainly well better than if I have a 3/3 of that. So by managing slowly but surely what the market is giving me on any times of the trade, I am able to collect all those profits. And I know that 80% is better than 58%, which is what I have in this case. And even if I go here to 70% from this particular one, it is still 68%. So having a target of 80%, you can see that gives you an idea of how much you need to pay to exit the trade. That's if I see a pricing in this neighborhood for what I call harvesting the babies, I will take it. I will take it. And go ahead.
No, I was just saying that that's really interesting, and to do that, because at some point it's not worth the risk of having that long out that far. So you can just roll it in when you have a problem.
Absolutely.
And the other thing is, too, when you enter a butterfly, then you can take a look at how fast your vertical prices are dropping off. And when they don't make sense to enter anymore, you can roll your long strike in some more.
Exactly. And that is the whole principle of that, is all that good stuff that probably is taught on the advanced position management and stuff like that. And coming from the debit side, in order for me to get 80% of this maximum reward, I can close that for a debit, for a credit of $9.21. So if I can sell this baby one vertical for $9.21, that means that in this particular case, I will be getting 80% of my profit. And you can see how to get this 80% of the profit. I can close this vertical for less money and less money because they cost me less to enter, right? So the maximum reward is bigger. So I can close these ones for less and less money, all right? But this is a good reference point. So, but let's go a little bit more consistent on how do I cancel that, and I am not going to calculate every single time my what price I need to pay. I could, because you just plug the numbers and this spreadsheet will do that for you. But if I consistently exit all my baby verticals, the great ones, if I consistently exit all of them by paying 75 cents, okay, depending, of course, on how much credit I am getting, this will be the returns that I will get for each one of those. The first one, because I got a very small credit, my return will be only 55%. Only. Okay, keyword only. I mean, come on. Wouldn't you be happy if you make only 51% on every vertical that you place? That will be a great year, isn't it? I think it would be for me anyway. But see, you get 55%, and because you get a bigger credit for the other ones, you start to get more on that. Okay, so it goes all the way to 86%. And in the other side, let's say that I want to close this debit verticals for a credit of $9.25. It is not the maximum of $10. It's only $9.25. I'm willing to give the poor market maker, poor guy, he barely has something to eat. I'm going to willing to give him 75 cents, okay, which is the same 75 cents that I'm giving them back here. So you can see that there is some correlation on those numbers, right? So I put that as for me a way to say that now you can see that the reward that I'm getting is consistently in the 80% of all of them, if I get to do that particular part, and that is what I was thinking, and that's what I said, that it will be a dream that I can make these exits in there, okay? But because it is a dream, and it's a dream in the sense that I will not be able to close all 10 verticals for this particular either debits or credits in there, that's what I said. But at least it puts me into perspective, okay, of what does it mean for me to do all those particular trades in that respect, okay? And so I have a quick example on that here on tolls, and that works better on tolls than it does in option view. I think that I can do that in option view, but I was just lazy because that is the real thing.
This is a lot of work.
It was a lot of work to do that. So, but this is so what I'm going to show you here. This again your your butterfly, nothing fancy schmancy, you know, this is it.
Someone's just saying they don't follow the math, and I think it's just that all you're saying is that, you know, you're looking at the price of each vertical as a ladder almost, and as the price moves around or as time comes by, you can close off each vertical at 80% profit or a certain percent profit, and you know, take your risk off gradually and have the potential hit in the center and the middle without actually taking too much risk.
Exactly.
Yeah. Okay.
Exactly. That is that, and really, really, it is important for us, you know, that I can explain that on a one-to-one to the person, that part. Okay. But I do invite the people. I really would like to motivate the people to try to explain that to yourself, you know, because it is important for you, because you need to understand verticals to do all these adjustments. If you are doing the M3 concepts that John does, you need to understand those verticals, not only how this math is coming out, and there's something else that I haven't mentioned in here, which is that when I close, if the only thing that I close is my baby vertical, you know, I'm going to say that I'm going to incur a margin in this particular case for 10 contracts, a margin of $10,000. Okay, so now we're adding yet another element to this equation, which is the margin that is involved on that. So if I only close this baby 10 vertical, I will have $10,000 in margin. Maybe less than that. Let's just take it the nominal one. You know, we can do the exact math depending on the credits and the debits and yada yada yada. That we can do exactly the amount of dollars that are in margin. But TOS will show that as a, well, I was showing that before as 10,000. Now I don't know how they do that, but you need to be able not only to calculate this math, but also calculate the impact on the margin requirements. And the same token, excuse me, the margin will not be when you close the credit. You will win $10,000 on margin. The margin requirement will be when you close the debit side, because you are canceling this particular one. I misspoke. So the margin when you close the debit side, then you're going to incur $10,000. When you buy back this baby one vertical, you win, so to say, what we call the dry powder margin. You win $10,000 in margin. That means that you can put another vertical 10-point wide somewhere else, where that will be, you know, and that is some of the stuff that I do. So I am not only interested on closing this baby 10 vertical just because I want to secure my profits and reduce my risk. You know, I know that I can place that baby vertical now somewhere in here that, depending on what the market is doing, is not going to make me any harm. But that is a topic for most advanced. But that's the whole thing. So I really invite the people, if you don't follow the math in here, you really need to challenge yourself. And then if you don't, please ask, and I will go and explain that to you. But then we need to talk about margin on this side and this other stuff. But that is also important, okay? Make sense?
Okay, great.
So what I have here then is just an example. It is, I said, it is not reality, but it is the basis of the stuff that I do to manage my trades. You know, I do have my butterfly, and as you can see that, I have here the 10 baby verticals over here, you know, that they will give me these are the debit ones, and then I have my debit and my credit simple verticals, and my other five baby verticals that I could generate on that. But the dream butterfly, you know, it really is when I start harvesting those ones. And what I have put in here, which is not the case right now, it may never be the case, is that I do have here the prices that I would like to close my trades. And I usually start from the end, you know. This particular one in which I pay the debit, I am closing my baby 10, the last one of the credit side, you know. Mm-hmm. And I'm closing that, and I said I want to close all of them for 75 cents. So when I do that, you know, let me just make sure that this guy here is in fixed. Yes, it is. So when I close this one for 75 cents, now you can see my risk is gone. You know, and there is of course a change in delta. There is of course a change in theta. There is all degrees are going to be affected. Your margin requirement, you know, is going to be affected. Your T+0 line is going to be affected. All of that stuff is going to be affected. So you actually need to understand what John Locke is saying on his methods, on his system, because they does have an impact on this right now. You can see that this delta here that we see on this column, this delta here is relatively high because I am making up this. This is not reality. This is not what is happening. I have elevated here the date to the end of May. 30 days from about more than 30 days from today. But you can see what the impact on that it is. We're lifting this left horizontal just by harvesting this baby 10. And then I'm going to harvest this baby 1 because the market is moving over here. Gave me the opportunity. I'm willing to close it for 925 and boom, kaboomy. Now my right horizontal is less. All what I can lose now, and this is important, you can see here on this number, this purple number is $3,500 on the left side or on the right side, and when I only have harvested one of them babies, I lose less on the left side, I lose the same amount on the right side. Actually it drops because, that is how this works, and vice versa over here. I'm going to increase my loss over here, but I am going to do this one over there. And that is something that we also need to understand. For all of us who have been around quite a long time, trading, when we do adjustments or management of the trade, it is like a blanket, a short blanket in the winter. We do uncover our head, and when we're covering our head, we are uncovering our feet. So we are eliminating risk on the right side, but maybe we are incurring more risk on the left side. And vice versa. When we cover our feet, then our feet start to get cold. We cover our feet, and then our head starts to look a little bit more cold. So we need to understand that, and that's what I said. It is important that people do that they just don't follow that blindly. They need to really understand that and the risk that they are incurring that. But in a dream mode, what I dream of is to have my trade that looks like this, and that is just harvesting baby 1 and baby 10. And if I do now, I harvest baby 9. Now you can see how this has. Now, if the left side is in dream mode, right? I can only win on the left side $5,800. The left side is not going to do me anything, okay? And how this number came from, right? What I did, and I'm willing to do that. My right side is on this side, and then if I am able to close my right side, then I am over here. Now I am in dream mode. Now, I can go on vacation. I can go to Hawaii, to the next John Locke course, whatever I want to do. This puppy is not going to lose money for me, right? It's in dream mode. Can I achieve it? And honestly, as I said, I have been able to achieve one side or the other side, not quite both of them on that, and that has been, I guess, more luck than skill, But it is possible to have that.
Yeah, so the market actually has to go back and forth instead of one direction.
Exactly, and you need to be able to sustain that hit, because if you are not, if your character doesn't allow, and this starts to happen, inside the 28 days to expiration. It doesn't happen right away. You need to be on the trade for a long time, and you need not to move that, and then by then you are 21 days to expiration, and then your guidelines have to change, and your guidelines are telling you something else. So you need to be able to bend that here, and that's what is a dream butterfly, and that's why I don't have any guidelines. I don't have anything. It is just a tool to analyze what will happen with that, because the most important part is, okay, I may not get into the dream mode, but what do I do with that now? And that, as I said, that is a topic for a whole big conversation, and it's going to take at the very least a bottle of El Patron, if not more.
Right. And I just had a question. If this changes when you're 3/3 out, I can't see why it would, but if you have 3/3 entered.
It does change what it changed completely is, and let me go back to show that, what it changed is your baby verticals,
Right.
You are
they're going to be on the outer wing.
There are going to be more of them, and they are going to be canceling each other, and they are going to have a different dynamic. It is just, you can do the same, and of course I have done the analysis. It is not more complicated. It just, you just have to follow the logic, and put those in one in there. But that is a very long conversation. But no, it does not change nothing. If anything, no, it's easier to achieve not to achieve, but it will happen faster, the harvesting of the outer babies. Let's don't call it the baby one. Then I think that there are 14 in that case. It happens faster because they are more out of the money or more in the money. And then the ones in the money, they're closer to the 925 that I want, and the ones on the left side, they are also closer to the 75 cents that I'm willing to pay. But that is, in a nutshell, what I do. And then, of course, this is just the basis. This is not a method. Okay, I'm not recommending anybody to do this thing here. For me, it is a tool. For me, it's a dream. But for me, it gave me a platform on how now I am going to manage my trades. Because, as I said before, I am also pretty picky on calculating not only how much capital I do have on a particular trade. I am very picky on knowing of that capital, how much is actually money that I pay to enter a trade and how much money is margin. Because again, if I do have this here, which will be the equivalent of a broken wing butterfly, 40 on the debit side and 50 on the credit side, that extra credit that I have in here, not exactly, but I can say that it's $10,000 on margin. So as we are making adjustments, and that is very very common, extremely common when we're doing the M3, and we're doing the adjustments. Say when John comes and says, well, we can move the roll the shorts, and then he comes and rolls these particular ones over here. When he does those one and he doesn't those one, he does that for a credit, and those ones here, then we're incurring some margin on that. So I don't know if people realize that, but that is what they are doing, and the margin in this particular case, if I get this credit, is going to be, a wash out. It's going to be only $75. But if it's the real price, which I'm going to unlock it here now, $3 what I get, then we're going to incur a margin of $700 times 10, $7,000. But I usually use the 10,000 just to make it easy for me, But so all of that stuff, we need to understand that, because if you don't understand how the money flows and how your capital is being utilized, then don't do these things here. You really need to understand that, and that's what I said is a tool, and that is why my system is so convoluted, because I do move things from here to there, but I do look first and foremost at my Greeks, my T+0 line, the risk that I am assessment, and how far I am going to stay behind the underlying on my trade, so that when I get those crazy moves, it's not going to hurt,
Right. And I have a question. What are the weaknesses, if any, of this method compared to a standard bearish butterfly?
As I said, the weaknesses, it's not a weakness. What you have to buy in is that you are going to be doing more trades. You may be doing over trading. Okay, you are going to pay a lot more in commissions. And then you may get whack. The underlying may move against you after you make an adjustment, and say, for instance, that I do what would be that? You do an adjustment, and then it reverses.
The market goes the other way, right?
Yes.
Yeah. Or it keeps going the same way, I guess. That would be the case,
yes.
Right?
So you have to really study that, but I don't see that as I don't do that with a simple butterfly. I don't place a put butterfly in there and wait for it to develop. I just enter an entry now or a rock before, and I start dynamically to manage the trade. If I follow the rock guidelines and enter that in my I enter 10-4 usually. I don't go 10-5. I enter 10 contracts on the put side and 4 contracts on the call side. you know, and then I follow the rules. And then when the market tells me, listen, Luis, I have a vertical for you that you can buy for 75 cents. Now you gain. I said, sure, I take that. Or Luis, hey, I have here a vertical that I can buy from you for 9.25. We play. Say yes, I do.
Yes, I do.
Yes, I am opportunistic on that respect. And that's why I call opportunistic, because I have assessed that, and you are going to say, well, you know, but it's changing your Greeks. It is changing your data. Yes, it's changing everything, and that's what I need to understand them. But it is not the same. It's certainly not the same that if we have the underline all the way over here, you know, to buy or sell a credit vertical on this area than to buy or sell a vertical over here in this area. You know, the impact is going to be completely different. You know, and so you need to understand that as well.
Exactly. You know, Jan is asking too if you could use this if you're entering butterflies. What kind of credit would you look for? In other words, if you do this analysis, at some point, it doesn't make sense to go any wider with your wings, right?
Exactly. Exactly. Now you are talking. Now we are getting into the nitty-gritty of why should I enter that? You know, not only, you know, if I see that this credit is not 165, it is now
10 cents.
10 cents. You know what I said. Hey, Luis, are you stupid or something? You know, why enter that? And vice versa. You know, when you are coming over here to the right side and you see that this vertical here is going to cost you $9.25. I said, I mean, what is the love here? You know, why would I buy one of these? So I just go broke and win. But that is the basis. Now I do have a financial reason not to do or to do a broken wing. You know, either on directional to a directional broken wing, directional to the bell side, or directional to the bull side, because the market is telling me, you know, yeah, I can sell you that for $10 more. You know, you're going to raise that, and I'm going to pay you anything for that. I said, please, no. But I need to understand that myself. You know.
Super. And yeah, she's just asking, what's the minimum you'll do that? You'll go without the extra 10 points.
I depending on the days to expiration, and sometimes as I said, you know, it really doesn't supersede any of the guidelines for the method. And sometimes, you know, I do need a long put. I do need one with this delta that I have in here, because I am suffering here. So it's going to cost $8 that, or $8.50. You know, fine. I know that I can make that extra buck because I need that, and I need that for many different reasons. You know.
So it sort of depends.
It's absolutely. There are no absolutes in here. That's for sure. You know, but if it's above the $9, and you are going to see that, right, when you're getting close to expiration, you know, both the credits that you are getting on the left side and the debits that you have to pay on the right side, they are just, you know, this is closer to in the north side of $9, and this is on the south side of 50 cents or $1. You know, I mean, if you see credits in here that are less than $1, don't go there. You know, I don't.
Right. Yeah. I agree. I mean, there's at some point where it's the law of diminishing returns. You just don't get the credit that makes it worth taking the risk. And I think it's an individual's trader. It's a individual choice to the trader as to what that number is. But that certainly does come up. Okay, so how do you calculate the prices of baby verticals at entry of your 50-wing vertical, since the market prices are always moving? Well, first of all, can it be applied to M3? I can't see why it wouldn't be applicable to an M3 trade.
Yes.
But how do you calculate your prices when things are always moving?
It is not that difficult, really. I mean, you can see these prices in here, right? I mean, when this is for May, but you can see that for anything in here. And it's just for one thing, there are a couple of cues that you get from option view, right? In this particular case, the underline, we're talking about the SPX. It works the same. It's not any different. Okay, the underline is around here on 2090, and it's not updated. I stopped the feed because obvious reasons. But you can see here, this is the first standard deviation, the second standard deviation, the third standard deviation. So on this particular one, you can see that I am queuing here for a demo, a vertical of that. Why? Because I can clearly see here, right? It's in the third standard deviation on the white side, and this is going to cost me 80 cents.
Right.
So I have here 50 contracts that I can do that. Said, well, why do you want to pay 80 cents on that? It's a lot of money, especially with 50 contracts. That's really a lot of money. But my strategy tells me that then after that, I am going to come and, just for the sake of argument, because it helps my strategy, I'm going to come and enter this broken wing butterfly. Okay, so let's calculate this financial exercise very quick here. Okay, if you guys don't mind. So I am going to buy me this here. Oops, sorry. That's what I meant. And sell this particular one, right? And
right.
I calculate the spread, and this spread is for 80 cents. All right? And then I am going to buy me this broken wing butterfly. So this broken wing butterfly is from 21, so that is 1, 2, 3, 5. Okay, 50, right? 1, 2, 3, 4.
That's 40 actually.
40. Okay. This is a 40-60, right? So that means that I will have $2,000 on margin per each of these ones here. All right. So that is what it means. So that's important for me. So I grab this guy here. I grab this guy 2 times. I grab this one here. I calculate my spread. I put it in here. And now this one is costing me $4. Okay. It is costing me $4. But then you can see that I do have for each, because it's 20 wide here to the extra vertical that I have. So it's 40, and then 20. I have an extra vertical 20 wide. Okay, so I have $2,000 per contract on margin requirement here. Times 10, I have $20,000. Okay, extra in margin that this particular butterfly will require me. Right? Well, but the price is relatively cheap. It's $40.70. So that margin that I require my campaign on that is coming from this in here. So basically what I am doing here, the equivalent in here, is that I am buying back, or I am closing cheap credits here, and I am selling expensive credits over here. That is basically what I am doing. Okay, but I need to understand that. So I usually, if I do this here, that's what I said, but this is, again, after I did all the analysis, after I checked my guidelines, after I know my T+0, I know everything, they said, I can add a broken wing butterfly. And this is the trade that best fits my trade. And so this one here, it requires me some cash, but it's the same equation. It's the same thing.
Right. Yeah, that's very interesting. That's very interesting. So I just have one more question too. If you close a baby vertical, do you open another one? And if you do you open it immediately?
I usually do that, and that is especially these days, when the rock moving so much. I like to be behind the market, but I don't like to be way far behind the market. I mean, if my T+0 line is flat and I am, 10, 15 points over here, these guys are really getting exhausted. You know, they just gave everything that they gave. So I can harvest these ones over here and try to open up some other ones in there. And the answer, do I do that immediately? Most of the time, yes. Okay, most of the time, I do the other way around. I said, you know, I need to beef off my middle of my butterfly. I need to get it closer over here. What type of vertical can I adjust over here? I'll say this is the one that benefits me the more. And I said, I don't want to incur more margin. Let me see how much it costs me to cross one baby on this left side. It cost me 80 cents. Done, deal. I got it. No problem. Let me do it. Mm-hmm. Okay, and I close that. Okay,
right. So open it up over there where it's more beneficial for you.
Exactly. And again, you know, I maybe my Greeks, maybe I have a bigger impact, but as I said, you know, I create vertical here in this region. It's not going to be that negative with the underline all the way over here, you know.
Right. Yeah, you're far enough away. Well, realistically, the other thing is too, software shows you one thing, but you got to kind of think about it. I've had verticals I've closed for 5 cents, and it puts me from positive theta to negative theta. Mm-hmm. And the reality is, if that puts you from positive theta to negative theta, that vertical only had 5 cents in it.
Exactly. Yes. So
there's no way it could do that, right? So the software is just kind of showing you some goofy numbers, and you just need to be aware of stuff like that.
And the best way to explain that to yourself is thinking in the opposite way. You know, let's say that the underline is here, right? And you want to protect yourself to a big sudden down move. Okay, you say, you know what? I think that Janet Yellen is going to speak, which is going to be true very soon here. Let me buy me some protection. You know. So the opposite way is if I do buy myself a put, you know, at the money here, my protection is going to be bigger than if I buy me a put all the way over here, right? It's the same put, you know, but this one is really not protecting me, right? This one is because it's at the money. So if the move to the downside happens, it does protect me, but, you know, it costs me more money, change me everything, yada, yada, yada. But, you know, everything being equal, you want the protection over here, not over here. The opposite is true, right? If I sell something in here, you know, it's really not affecting me that much if I done in here. So here is not the same bad effect as if I sell it on this area. So you just have to, sometimes you just have to change the hat of direction just to see how it looks like.
That's super. So I think that's all the questions we have. Do you have anything else to go over, Louis? Or?
No, I really want to bore the people more, you know, and they have been so kind to stay with me.
Great. Well, thank you. It says, having collaborated with Louis many times, I know him to be one heck of a trader and a gem of a man. He is generous in sharing and supporting in the trading community. Thank you for acknowledging his work. Yes, you're welcome. And like I said, we want to acknowledge great traders. Thank you. Louis is an incredibly gifted speaker, instructor, and trader. He digs deep into the nuts and bolts of the trades and has been the best trader of the month to date. Awesome. Thanks, Gail, and excellent presentation, Louis, and thank you very much. Not boring at all. Well, it's good. It's simply fantastic. Awesome comments. Everybody's thanking you. And I thank you too for coming and sharing what you're doing with us. How, you know, I feel great when I talk to successful traders who I've helped and who are out there going out and helping others. I think it's just wonderful to get us all on the right track and get us all profitable.
All right. Well, thank you, everybody. Thank you, John, as well. You know, I mean, you have been the most generous of all of them. You know, all of us. You know, it's just the stuff that you put out there really has changed the look of many of us out there. So we have to give you a big thank you to you as well.
Oh, you're welcome. You're very welcome. Thank you. That's why we do what we do. And again, thanks, Louis, for sharing this with us. We will let everybody. We'll let you go now, and we will talk to you soon. Thanks, Louis.
Right.
Yep, bye-bye.
Bye.